Hey, it's Mike over at Cross Country Mortgage. It's time for your Monday morning mortgage update for the week of July the 8th. I hope you all had a great 4th of July weekend. Stayed out of the heat, stayed cool, got in the water, did whatever you needed to do to get out of that 118-degree heat. Gail and I were on the coast. Very nice, cool weather, and glad to be back on a Monday morning. So what's happening in the market? I always try to give you insight on what is happening so that you can go out and talk to your buyers, sellers, and have more impactful conversations. Last week, we actually saw rates get better by about 27 basis points. The pricing improved. We actually should have seen a much bigger improvement because we showed some weakness in the economy. Manufacturing and servicing were down, meaning businesses aren't making as much stuff. Those numbers were down on the monthly report. And the service sector in the labor market was lower. And to see both of these numbers low in the same month is actually rare. And the reason we didn't see better pricing or a really big improvement in rates is because all the other volatility that we're seeing in the market, inflation, the weakness in the job market that also came out last week, the uncertainty about what's happening in election year, et cetera, et cetera. So we'll take it. We'll take the small improvement. What are we looking at this week? Really two things. We're looking at inflation and the Fed. So CPI, Consumer Price Index, and the Producers Price Index, two key measures of inflation come out every month. They're coming out this month, this week for 2 months ago. And we expect those numbers to be flat, maybe a slight increase. The last month they came out, we had flat inflation. This is positive for mortgage rates because we know inflation is the death of mortgage rates. When inflation is up, mortgage rates are up. So as we start to see inflation come down or equalize or flatten, that means the Federal Reserve may start cutting rates. They're not going to cut rates until they see inflation come down. And when they cut rates, that means lower prices for everybody. So we're going to pay a lot of attention to those inflationary numbers coming out this week. Fed. So Jerome Powell, our Fed chair, is being grilled by the Senate and the House this week. It happens every quarter. He's going to give his insight about what's happening in the economy. A lot of attention being paid to what he says. Is the Fed going to cut rates this year? Are they going to cut once, twice, none? Is he starting to see the economy weaken, which is good for mortgage rates? Is inflation starting to curtail or flatten out, come down? That's good for mortgage rates. Is a labor market starting to soften? We saw that last week with some labor numbers. That's good for mortgage rates. So a lot of attention will be paid to what he's going to say. Final tip, final thing is about writing better offers. So we're seeing a lot of clients get their offers accepted, not because we're writing better offers, because we're writing more strategic offers. Think about this. There are fewer buyers out there, and there is a smaller piece of the pie that everybody's going after. And so if you want a piece of that pie, if you want a piece of the homes that are available, you not only have to write better offers, you have to write more strategic offers. So check out the video down below and some of the content that I've included here on how to write those better offers, those more strategic offers, and get your offers accepted. We've been able to win a lot of offers because we're thinking outside the box. Partner up with your lender, write more strategic offers, and get those offers accepted. Hope you have a productive week, and we'll talk to you next week. Bye-bye.